come and go, profits come and go. Profits 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 come and go, profits come and go. It's slow, it's fast. Don't chase the market or run past. So fast, you won't even see it go. So fast, you won't see it move. Yeah, the markets move. Yeah, the markets move. Yeah, the markets move. Yeah, the markets move. I got a clue what it's gonna do, but at the same time, I be losing moves. The market comes and it goes, and it's up and it's down, and it's moving so fast, different ways to dash. All the cash stash, liquidity, chasing that, yeah, the market chasing that, the market chasing all of that, all liquidity, liquidity, Last trade of the day, last trade of the day. We gon' see what happened, how the market sways. We gon' see if it goes that way. Up. It's probably gonna sell once it gets up here, now that I think about it. I don't like holding trades over the weekend. It works sometimes, other times it doesn't. If you hold a trade over the weekend, it's really a gamble, because you could be in the right side of the market, but if you just so happen to be wrong, just by chance, then if the market gaps, you can lose more than you were trying to risk to begin with. That happened to me. This week, I lost 2 trades going into this going into market open, because I could have just took profits, but I didn't. I held it because I thought I caught a swing trade, and then as soon as the market closed last week Friday, GBP USD gapped down, and I already saw that I was out of profit, and I was like, damn, I have to close this out as soon as possible, as soon as the market opens. I literally set an alarm, and yeah, it's too late. But the previous week, I was in EU and NZD. I was in Euro USD and NZD USD sells, and the market gapped down, and I was in more profit. And I stacked positions when it retraced, but I could have just took profits right there and then entered back later on, because I was up. I ended up coming out with half of what I would have really made if I just took profits. So it's really not worth holding trades over the weekend. Opportunities, they'll come back regardless, because this market is just one big Fibonacci spiral. It's an infinite continuum of recurring setups that grow and expand and contract all at the same time. It's the same setups. The same things happen every week, every day. It's all time based. It might look different, but every single day, at the most crucial points of the day, when it's the start of a session, whether it's London session or New York session, there's a decisive market move that happens. And it's a matter of timing these things by just being there when it's going to happen, and just being and looking for your entries. So trying to enter outside of these ranges is possible, but you just have to be conscious of the fact that the market might slow down right after you enter. Like if you enter a trade after 11:30 a.m., well, after 11 a.m. really, the market starts to slow down in most cases. That's what I've discovered. But I've been screwing myself over by taking trades in the afternoon, because I keep waking up too late for New York session, or I'm too tired so I don't even trade like that. And then when it comes to London session, I don't even trade it like as much as I used to. I could though, but I prefer New York session because everything is already laid out, and it's usually a straightforward trade setup. That's if you have the right market direction in mind. But it's not about like what you think the direction is. Like it usually just shows you. You just gotta see it for what it is. Cause look right here. Alright. Right here. Alright, 8:30. Exactly at 8:30. You could have took a buy entry on gold. This was on Tuesday. The reason you could have took a buy entry, look, you see I was a seller. I was a fool. And that's because I entered in between sessions. This is what I'm talking about. I keep messing up by not just being patient and waiting for the right times to look for setups. Because all that's happening is liquidity is being made for when it's time to make a real market move. So what's the point of entering during consolidation or during like an indecision period or right before a reversal, when you could just wait for the reversal to happen and then you enter when the market retraces during New York session. And you don't even need to be in the, you don't even need to take the trade all the way down to this low down here. You could aim, look where I would aim, I see this right here, this imbalance. I would take profits by that point. So probably like right here at these lows. Yeah, that could have been that. But when I trade during London, I get confused because I expect the market manipulation, but I don't be trusting what I'm seeing, and it kind of it fucks with my head. But that, I guess it makes sense. It's literally market manipulation. It's a weird time to be trading because London session usually creates the high or low of the day, and what it does, it creates false moves before going in the direction that it needs to. It does that so it can get liquidity, and the liquidity is usually from the Asian session. But it doesn't do that all the time. Alright, 8:30 a.m. Look, I was locked in this day. I remember I said, nah bro, I'm not ending off the week on a bad note. I got my profits, I'm in a good position. I'm gonna take my time, take these trades. I actually recorded this. I think this was no, that wasn't NFP, was it? Was that NFP? Because let me see. Yeah, this was NFP. So I was awake right on time. I knew that this was a retracement, and when I saw the way that the market had pushed back up as soon as it got down, I knew that confirmed it, that the market was gonna go up. Plus, on the higher time frame, I was seeing an inverse imbalance was being retested. So yeah, that was a straightforward trade. I could have held it all the way up here if I wanted to, but I didn't trust that, because when the market started consolidating over here, I said, yeah bro, I already got enough profits, let me just take what I got and keep it pushing. I could have left a small position. I could have left just a very small partial position that could have just kept floating. Because imagine swing trading it like that. But I don't trust it though. It's hard for me to trust the market giving me a smooth run beyond a certain point nowadays. Because look, it didn't even take out this high. It came close and then it dropped. I usually aim for just Fibonacci levels because it makes more sense. Like right here, I could have aimed close to the 168 or the 127. Oh yeah, I did. I aimed within that range. Got out within that range. So I could have held the trade technically and just put my stop loss down here. But I did not do that. So look, the reason I could have known that I was good was just based off the time of day and what's happening. I'm gonna mark this up real quick because it makes sense now. Yeah, just based on the time of day, this is not going to just have an aggressive sell-off. There's a bunch of highs up here. This imbalance was already filled. This 15 imbalance was already filled, and that happened at 12 a.m. And what happened at the start of London session? Alright, so at 12 a.m., the market filled a 15-minute imbalance, and then it began to sell off. This could have been a valid sell entry going down into this imbalance. And I see I had bought it early. I was in this shit early, from like 3 a.m. My stop loss was in a good point. I didn't have anything to worry about, but I literally took profits around here. I said, yeah, I'm good. And then price took out the low from London session, which is very bullish. I really could have held this trade. And then it hit the 78%. Kept going. So another example of how the New York session is very calm. It's what I prefer. Oh, that's why I reversed. I remember I saw this, bro. I was getting in my own head. Because, look, watch this. And this was divergence. I knew that it was gonna sell off. I remember seeing this imbalance, and I saw that I could have took a sell, but I didn't trust the market. I didn't trust the market because I didn't know if it was gonna break this high, or if it was gonna reverse. So I wanted to see what would happen. And this was on Friday. I was being very selective. This was last week Friday. I was being very selective with what trades I was looking at, and I chose not to look at gold because I felt like I did what I had to do. I really could have held these positions all the way up here. And these could have been, I could have took partials on these earlier positions and let them run up to this level too. So it's all about timing, but I've been messing up my timing. I need to be more disciplined because I don't wake up in time because I'll be tired. Sometimes I stay up looking at the charts or taking trades, but every time it's always better for me to just have waited until the morning. So I gotta get more disciplined with sleeping. And the thing is, I have been, but I'd be too tired while I'm trading sometimes because I wake up regardless of when I go to sleep. But I need to stop doing that because even if I'm up, I'm not at my most effective. Just not. Gold has been so easy. I could have been trading it this whole time. It's just about timing, bro. What am I doing? What am I doing? It's always been about timing. Nothing changed. Bro, this is mad bullish. I thought it was gonna sell off. I can see why I thought that, but if I just waited until like 8:30 a.m. to see what it was looking like, I would have seen the break in market structure that would have confirmed that this was going up. The break in retest, the retest happened at 8 a.m. and then at 8:30 there was already a support level for the market to bounce and go higher as the session began. And look, I call it this, but that's such a small amount compared to the whole move, bro. And look, I'm still trying to buy right here, and this was at 8 a.m. I was trying to buy this at 8 a.m. What was I doing? And then the market just created some liquidity. Asian session is so important. It creates ranges, and those ranges matter. I need to start paying more attention to them. Because look, it just so happens that this high from February 18th at 8:30 a.m. aligns with the 50% level of this week. Well, of last week. What are the odds? So I gotta pay attention to these points that gyrate, where it's just like an aggressive move that doesn't necessarily achieve anything other than create liquidity, because it created this extreme high, this extreme low that barely took out this one, so it was basically an equal low, just about. So that was a liquidity target, and this high right here had to be taken out. And look, watch this, I bet. Boom, boom, boom. So right here at 8:30, I could have been a seller. Oh my gosh, I could have sold this. What was I doing? I need to just be up every single day at 8:30 a.m. No, I need to be up every single day at 7:30 a.m. No. I know I'm gonna confuse myself if I look at the market, but it's more about just like being up so that I can do everything I need to, have time to fully wake up. Yo, cause watch, bro, I could have. And then aim for the low that was made during the Asian session, and I would have been good. I would have, bro, this would have been valid. This would have been valid. This would have been valid, man. I see now. I understand. I understand what I'm gonna do, what I have to do. And I catch the moves after they make sense. This is one I caught at 12 a.m. But that's better than trying to catch a trade at any time before 12 a.m. Because midnight is an important point where the market just begins moving. We're creating ranges. Like, look at all these examples here. At midnight, this imbalance was filled, the market sold off, created the low for London session, which later got taken out in New York session. And then, let's see, 12 a.m. on this day, the market began trading up for it to then create its high at 3 a.m. Yo, this was an easy sell. What am I need to lock in. I need to lock in. What am I doing? Trading gold is so straightforward. It just looks crazy in the moment, but it's very straightforward. You just need to not be greedy. Don't fall for the gold rush. That's crazy. So I could have took profits like down here, and the market began retracing, well, slowing down. It usually slows down around 10:30 going into 11. So when it makes these extra moves down, there's times where I get caught up trying to catch scalps on the way down, but it's not worth it. But I'm a hypocrite because look at me right here. I'm inside of this buy. So it really depends. It really depends. If I didn't get stopped out already, then I'm about to close this trade. But this is why you don't do it. Because although everything looks right, it's a time where a lot of manipulation is happening. I didn't get stopped out. I'm closing my positions. So I only lost half of what I would have. And that was an extremely low risk position. I just had to see what's up. But nope, it's not worth it. My prediction, sometime at the start of next week, gold is gonna come up into this imbalance and then drop. That is my prediction. Yeah, everything that's happening right now is just consolidation. It's gonna consolidate into next week, or first it might come down into this imbalance so it can get the momentum to fill this imbalance. Because from where it's at right now, it barely has any leverage to go up and do that. So it will make sense for it to go down first and then before going up. It all makes sense though. I just gotta time the market. Gotta time the market. There's only specific times where trading in the afternoon works out. I think the FOMC was on this day, on February 19th. Yeah, that's what it was. But if there's no liquidity being put into the market through news, like red folder news, it's usually gonna just consolidate or not do anything eventful. Usually, because look, that's what happened after this aggressive move on gold. How many pips was this? Wait. From the high that was set after 8:30 a.m., it traveled, is that 238 pips? That's that's insane. And then the market goes into a range. It doesn't start trending or anything. The range is 1,300 pips. I wonder how many orders are in that section, because that's a lot. It's a big range. I see. So then the market dealed around this order block. And at 8:30 a.m., ooh, oh yeah, that's right, I forgot about that shit. Okay, noted. At 8:30 a.m., the high from the afternoon was taken out. All it did was create liquidity. Whenever it creates these ranges, it's just liquidity for later, every time. And it becomes an important level. Oh, that's how true it is. That's how true it is. Yeah, I really think the market's gonna drop and then go back up. Should I sell it then? I just told myself that it doesn't make sense to do it, right? Yeah, I'm not even gonna do that. Why would I do that to myself? Alright, so it's all about timing. I think next week I might only just focus on gold. Gold will give me everything I need. It may be EU. It really depends on the futures market. So we'll see. We'll see. We'll see how it goes. Could have been a sell in the afternoon. I don't think it was worth it though, but it helps to just understand what's happening. How do you trade something like this? I'm gonna figure that out. I'm going to figure that out. Interesting. So the market didn't even return to this area until later on. Yo, this is still a very high this is an order channel point. What the heck? I got caught in an order channel. I didn't even realize. Wow. It makes sense now that I can see it. Interesting. Yeah, I think that I forecasted the market. We'll see what happens, but I really do think that I have a good outline of where it's gonna have its reactions at. I don't know exactly which way it'll go and how it'll happen or when. I just know the areas where it'll react. So yeah, I'm gonna just focus on gold, focus on timing, getting my timing right, because there's a lot of opportunity. This was a buy. What if I bought this down here? This was during the afternoon. So, well, during the evening. Let me see, actually. Where's the afternoon range? So during the afternoon, this imbalance was filled. Consolidation. Consolidation after it takes out this high. So the market is building up liquidity up here. This shit is building liquidity. Oh my gosh, this is amazing. This is amazing. I love symmetry so much. This is the same feeling that I get from watching the NBA and seeing players do amazing athletic and mental feats, and just nah man, look at this symmetry of time, price. Damn, so I could have took profits like right here before it reached here. And that imbalance ended up becoming, it helped create a support level. The market hit it and then it began to consolidate. So Monday, oh, this is all Monday. I just realized this was Monday too. So you wouldn't even be trading this. It's just creating the liquidity for later. And also just creating some support so it can do what it has to do. So at 8:30 a.m. there's an entry, and then that John ran. Yeah, could have aimed for this high right here. What the heck? That high aligns with this Asian range that I was analyzing earlier. That ended up being an important level. This is what I mean when I say the symmetry. Do you see the way all this flows into each other? This is insane. This is insane. It's just like everything is just one continuous setup. That's what I mean when I say the market is just one big Fibonacci spiral. Repeating patterns, growing over time, growing and contracting over time. If you miss a setup, there's no such thing as missing a setup. It always comes around in a different way. Well, more so at a different time. And sometimes it's the same thing, but it displays itself in a different way. Sometimes it's the same exact thing. Like there's this one reversal pattern that I usually see, and gold did it. And I remember seeing it on Bitcoin. When Bitcoin was first doing it, I saw it and I was like, yeah, like it's going to run for a while because it's doing that thing. Amazing, amazing, amazing. I'm feeling amazed. I'm feeling amazed. Yeah. Honestly, Gotta be realistic with this take profit target. Gold is where it's at.